Well, the auction clearance rate at 50.2%, that means 42.5% of homes have now been relisted for sale. A July rate cut now looks shaky as NAB and CBA don't see eye to eye. Inflation, it's edged up as the RBA is walking that tightrope, and two standout auctions that lit up the week, but this isn't market magic. It isn't a runaway market. It is a market that rewards discipline. Well, g'day folks, it's Matt Hayson here, and this is the word for this week, a no-spin wrap on Sydney's property market. Let's look at last week where there were 1,060 auctions scheduled across Sydney. Now that is a big number, and at first glance you'd think that the market is surging, but here's what really happened. Now let's break it down. 252 properties sold prior, 281 were under the hammer, and 51 sold post-auction. That leaves us with the clearance rate at 50.2%. But the hidden headline, the one you don't read about, that means 451 properties, 42.5% were re-advertised for sale. That's not momentum, that's a market still finding its footing. Yes, buyers, they are showing up, they're inspecting, they're engaging, but they are not being swept away. They're measured, they're surgical, and if the price isn't bang on, I'm telling you, they will walk. Now, this isn't a FOMO market. This is still very much a fear of overpaying market. Now, a couple of auctions broke through that noise last Saturday. 41 Elliott Street in Balmain, 11 registered bidders. I attended this auction. Strong intent bidding, 100K over the reserve, and 52 Clarendon Road in Stanmore. 14 registered bidders, 6 were really active, and that sold for 200K above the reserve. But let's not mythologise these auctions. These weren't the spoils of a red-hot market. These were the result of spot-on pricing, discipline, execution, and strategic vendor alignment. Now, that's the truth behind most of the auction theatre that you're seeing in the market right now. Now let's talk rates and mixed signals. Early in May, NAB had forecasted a 50-point cut, as we know, but that didn't happen. We got 25 basis point cut last week, but NAB still calling for another cut in July. They're holding the line, but here's where things start to shift. Inflation just edged up again this week. Not a surge, but enough to make the RBA blink. Rents, insurance services, still very sticky, and that's changed the mood. CBA now says July's off the table. They don't see back-to-back cuts, not with inflation bubbling away under the surface. So now we've got two major banks, NAB calling for July. We've got CBA saying not so fast, same data, different outlooks. Now that's how fast this narrative moves. One inflation print and the whole tone and market shifts. Now the RBA is walking that tightrope, as we all know, trying to stimulate growth without reigniting inflation. But as Governor Michelle Bullock said last week, that if property prices do rise during this easing cycle, we may just have to wear that. So I'm still thinking there is a cut in July, but let's see what happens. But here's the breakdown. The market has energy, but it's not racing. It's not really a reactive market. It's a very much a calculated market. Now, if you're a seller, you got to read the room, not the headlines. That's important. Now, if you're a buyer, move strategically, because you don't want to wait too long, because the really good stock, it's moving, and when it's aligned with value. So for the rest of us, that means us, agents, advisors, and property observers, it's a time to really be clear, calm, and quite clever, because the difference between success and silence right now isn't the market, it's how you read it and play it. So that's a wrap for this week, folks. Thanks so much for watching. Get out there and check out some of the amazing homes we have open this weekend, and I will catch you all next week.